There's a huge problem with major banks right now. Some of them are preparing to unleash a devastating wave of foreclosures that have been building up over the past 12 months. And we might even be at a risk of a financial crisis like 2008, but it's going to be much worse. So this means that your money is in danger and is not safe in banks anymore. Because as banks start to fail, they can legally save themselves from going bankrupt by simply going into your deposit account to stabilize themselves. And if that wasn't enough warning enough for you, we just got another critical warning with the United Nations warning the Federal Reserve to stop raising interest rates. And with the bond market nearly collapsing in the UK, we could see a repeat of 2008, but much worse. Now let me first tell you about one of the banks that is on the verge of collapsing. Now a few days ago, Credit Suisse was rumored to be on the verge of collapse. How did this come to happen? Well, investors started to look at credit default swaps, which are essentially bets on whether a debt issuer will survive. Now, Credit Suisse described themselves as a strong lending manager with strong investment banking capabilities. So they're one of the main managers of wealth globally. And here's the chart right here. Credit Suisse credit default swaps spread at 14-year highs where we are today. And we haven't seen these levels since 2008 in September, which was right before the financial crisis. And now this puts them in the same situation as Lehman Brothers in 2008. You see, the Lehman Brothers had $600 billion held in assets when they crashed and took the economy with them, as opposed to $800 billion, which Credit Suisse Bank controls in assets under management. Their stock is also tanking, down 70% from their all-time highs, and this is even without any underlying issue. But a lot of the rumors that have been going around can quickly become self-fulfilling prophecies as panic and clients start to withdraw their money, and unfortunately, their CEO's recent statements have not really calmed any investors at all. The bank then said that it was still pressing ahead with its review that it includes potential asset sales, so Credit Suisse is preparing ahead and will be divesting selling some of their assets. And that brings us to the current economic climate, because look at this everyone. When central banks start lifting interest rates and start quantitative tightening, that's when they start selling assets on their balance sheet, and like bonds and mortgage-backed securities. And this shows the fragility and weakness of the financial system. And because the banks have relied so heavily on cheap debt, a lot of zombie corporations and free money being distributed, as soon as those things are removed, we see how frail these big institutions really are. And in the coming months, I believe some of these institutions that we previously believed were so big to fail will begin to fail in a very real way. You see, we're about to witness the start of a Lehman-like event. And that's precisely what happened with the events that happened in the UK, the power outage, the London Stock Exchange explosion, and the global currency collapse. And especially in the US, the Credit Suisse may be on the edge of bankruptcy. But I'm beginning to hear alarm bells, and this is actually beginning to resemble 2008 a lot. So could this be one of the reasons as to why we are starting to see the stock market crash? Because a lot of these companies are actually in big trouble, as they're selling assets like credits. And I think this could lead to more selling as we start to see interest rates go higher and higher. And then what was going to lead to even more of the healthy institutions being in some real trouble with a huge amount of debt on these public companies' balance sheets. And take a moment to listen to this, everyone. According to people familiar with the situation, Swiss has also been in negotiations with investors to raise capital, and one of the options discussed involves a possibility that the bank may fail. And this could lead into them essentially leaving the US market. So if you have any money with Credit Suisse in the US, this is not financial advice, but for me personally, I will be running to the bank right now and withdrawing every single penny I have. And sure, what if this collapse never happens? Well, right now, we're seeing every single market in the financial system in the banking sector in big trouble. And as mentioned before, the stock market's going down, cryptocurrencies are down, gold and silver are down, commodities are also starting to crash, and I've also been warning about the surging US dollar, which is going to cause a foreign debt crisis, because that means that these other countries that are having their currency fall, they're going to have to print more of that currency to pay back their debt that is valued in US dollars. And they're also going to have to sell US treasuries to get dollars, and that's going to mean interest rates on the US treasuries are going to go up, which is going to lead to higher funding costs for these corporations. So the US dollar strength has historically led to some kind of financial or economic crisis. Higher interest rates can also lead to foreclosures, which can turn into a devastating housing crash worse in 2008. Now, during the pandemic, there was a foreclosure ban. There was also an eviction ban. We had millions of defaults where banks were not allowed to foreclose. Well, now they're allowed to foreclose and cause home prices to crash in certain cities and certain neighborhoods that are most exposed. And one thing that has me convinced that this foreclosure wave is going to be way worse than people expect is because there's so many bad loans out there on the US housing market right now. For example, let's look at the last 70 years. The average down payment that a home buyer puts down, we can see it's been on the consistent decline. In the 50s, they were putting over 35% down. In the 70s, they were putting over 25% down, while today they're only putting about 17% down. And according to this data, the less money that a borrower puts down to buy the house, the more likely they are to default. And I think that some of this data might be a little shocking to you all, because we're sold in the narrative by mainstream financial media, by people in real estate, that all the loans in the housing market are good loans. Like, I see so many people say that today. And what's shocking about this data is that the average down payment today was actually lower than it was in the 2000s during the bubble. And so this long-term destruction in mortgage lending standards in America is allowing basically people who probably should not own a home to own a home, which is of course going to increase defaults and foreclosures. And historically, you can see where there's a surge in defaults like there was in the late 2000s. But take a look at this, everyone. The foreclosures, the blue line, actually kept going down as the defaults went up. Did the foreclosures keep going down when the defaults were going up? Well, because the US government kicked the can down the road on these foreclosures, they enforced a foreclosure ban, and on top of all of that, they forced banks to allow extended forbearance periods that didn't allow them to foreclose even after bans ended. And this, of course, constricted the inventory of homes in the US housing market, lowering foreclosures to even less than they were in 2018 and 2019, which helped push home prices even higher and make the housing bubble even bigger. However, here's the thing. This is now all going into reverse because banks are starting to foreclose. Foreclosure starts are up 150% year over year, and they will continue to increase as the recession in the housing crash in America gets worse, especially in certain parts of the country. And like I said earlier in the video, there is a mixture of bad economic data that could lead us into an even worse event than 2008. And in my last video, I've been warning about the surging US dollar, which is going to cause a foreign debt crisis, because that means that these other countries that are having their currency fall, they're going to have to print more of that currency to pay back their debt that is valued in US dollars. And they're also going to have to sell US treasuries to get dollars, and that's going to mean interest rates on the US treasuries are going to go up, which is going to lead to higher funding costs for these companies, and the US dollar strength has historically led to some kind of financial or economic crisis. Also, the UK government, when they tried to announce all these tax cuts and tried to take on more and more debt, that's going to cause people to say enough is enough with lending to the US government, because there are over $31 trillion in debt right now, and with interest rates rising, it's only going to add trillions of more dollars just in interest rates alone. So Credit Suisse seems to be the beginning of what could be the end right now. Now, I'm not saying that they're going to collapse this week, but we could see the beginning of the collapse start this week with Credit Suisse, as they could be the beginning. And as we see interest rates rise more and more, we're going to see more companies come forward to say that they're in big, big trouble. And this is why you don't really want to have all of your money in your bank, at least not have it all in one bank. You just want to diversify. Have some cash on hand, have some gold and silver, some Bitcoin in case of a full-on banking crisis. And I don't think this foreclosure wave is going to be as big as the one in the mid-2000s when we saw tens of millions of foreclosures. However, we don't need to see 10 million foreclosures, don't even need to see 5 million foreclosures to make this housing crash get really, really bad, because right now in America, inventory is already exploding. Home prices are already crashing, and in many parts of America, so just adding a couple million foreclosures to the situation is going to make this housing crash much, much worse. So I want you to let me know your thoughts down in the comments below. Do you think we're heading to something similar like 2008, or is it going to be much worse? Let me know your thoughts down below. As always, thank you guys so much for watching. Until next time.